I'm watching for a re-short entry into what I'm perceiving now could be a downside kind of trendish sort of move. I'm trying to watch for 3 or higher to go short, ideally around the 350 area. Let's see if they can pump them back up here. Trying to short 350 or higher to re-enter into a downside move here. Stay ready to go short around 3, above 3, but around 350. I can give you an exact number that I'm watching for. So let's hope they can pump this thing up here a little bit and get us up there in the 350 area to go short. Let's see if they can do it in here. Hopefully before they spill off to the downside. Let's see if they can pump them up about 350 or higher here. Here we go. Let's get ready here. Stay ready, stay ready. Trying to get above 3, ideally 350. I'm going to call out the short there, so be ready here. Let's see if we can just get a little bit of a higher pump up here, up towards 350, and take our risk up there. 275, 275. Try to get 3 or higher, but ideally 350. Don't want to miss it, but don't want to jump in too early because they may try to pump it up a little more, and it could stop out the trade too. It's Friday, a great day to have a lot of difficulties with trading. Much trickier day to trade on Fridays. Let's see if they can pump them up over 3 and try to get 350. Watch out here. Let's see if we get them. Trying to get a little boost over 3 to go short. Any little boost. There it is. And
Order
short
filled.
the market up there at that 350 level. We'll use 3/4. There's 3/4 again. So we'll use 3/4 our short, and hopefully they don't whipsaw the crap out of this on the upside on this Friday with all these goofy riggers and their fantasy of this endless permanent $100 Dow rally every day. It's completely ridiculous, but that's how they're thinking. I mean, they're just like they're on drugs or something, these riggers. Just frothing at all this artificial upside driven market here. So short at 3/4, 90, 48/4 would be 5 points. I'm actually going to try for 5 points here trading. We're trading back into what should be a sell bias chart pattern. Unless the riggers come in and start pumping away on the upside, we are selling back into a sell chart pattern, a new sell chart pattern. So the pressure should be there on the downside. I'm going to hold out for a 5-point move down to 4. We're short at 53/4. I'm going to hold out for a move down to 48/4. 53/4. There's a second stab at it right there. Just had a third, fourth stab at 3/4, and I'm going to hold for a dip down to 48/4, expecting this sell pattern to kick back in on the downside further. Always the big problem is if these riggers decide not to let the sell pattern kick in and start artificially pumping it back up. That's always something you have to tolerate. Let's see if they can break them down under 51, knock out the 60 50 price, and that'll help our case for a dip down to 48. But we got to watch out because maybe the riggers just don't want this sell pattern to emerge. It's a continuation into a start of a sell pattern here. Obviously that was a pretty strong punch to the downside, and we're just trading up at a key resistance level, looking for that market to trade back into the downside just a little bit. The last dip low was 48, so we're kind of could be a little shaky here. We're asking them to go back down and tap that dip low there. So stay ready to jump out. Maybe the riggers are going to try to block it, but the sell pattern here should be able to get started, taking them down at least to test that 48 level again. So let's see if we can get them going. We got to get this thing under 51 to put some pressure on and then obviously break the 60-50 handle. There might still be a little pump up left in this thing, maybe as high as 55, but you have to just, when you're doing this, you have to pick your target and stick with it and hope for the best based on thorough analysis that I do on each trade. But this should be willing to trade back into the downside unless the riggers decide to do a little pump up action here to try to block the market from falling into a sell down pattern, which is what they have been doing for the last 3 months, just blocking the market from making a normal natural pullback of any kind. So it's always going to be a concern until we finally snap this idiocy and the market starts making normal 80, 100, $150 Dow type pullback days. Totally is ridiculous, but that's what they're doing. Stay ready though to jump out. We have to be a little careful because the riggers may just not want to let this we're just falling right now into a sell pattern here. And ideally they're going to knock this thing down to the test 48 again. Let's see if they can do it. We've got to get 51 out of the way. That'll put the pressure on the downside, and then cracking 50 should send them sliding down to test that 48 again. We've got our 5-point exit right at 48 and a quarter, so if they can just go down and break 50 and try to retest that low, we should be okay for them to go hit our 48 quarter, because we're short at 53 quarter. So right in here, either the riggers are going to try to pump it all up again, just like little spoiled brats. We're trying to block this sell pattern from kicking in. Let's see if we can get them to back off and go down and test that 48 level again. It should be in the cards, but what can I say? We got rigger games here being played like crazy the last 3 months especially, and the last 3 weeks especially. So new sell pattern trying to form here. Let's see if we can get this thing to peel off to the downside and start working 51 or lower, with the idea that they can crack 50 and knock them down to 48 quarter. That's our target goal from our 53 quarter short. If they can't hold them in general under 55, say 55.50, then we got a problem, and we may have to just get out of the trade and call it a Friday problem, just typical Friday choppy whipsaw weirdness. But for now, if we can break them down under 51, rock solid, I'm getting some signs here, break 51 down, put some pressure on 51 or lower, and then crack 50, then it should be a relatively smooth slide down to 48 quarter to hit our target goal. Okay, let's see if we can get that pressure under 51. Could be a rigger number, but if they, okay, good sign so far. Breaking and then cracking 50 straight down to 48 quarter here. Trying to crack 50 and knock them right down to 48 quarter. Let's see if we can take them down. They're defending 50 here. So far so good though. Let's hold short.
Target
and
filled.
We're filled on the target. Perfect. Beautiful. Panned out just as we expected. And again, I want to remind you, I'm going to repeat this all the time, we use the markets to carve out a paycheck. We don't let the markets use us. And what I mean by let the markets use us, which is 95% of traders The market's using them and driving them crazy emotionally with this disease of mental thinking in trading called would've, should've, could've. It's I'm warning you now about this. I've been trading a long time and I understand this very thoroughly. The markets in hindsight will go somewhere and the brain starts thinking, "Oh, I was only short from here to here. I would have, should have, could have held them longer." Or because you're in a trading room with me running things, I become your excuse for not having that happen. It's Mohan's fault. He should have, this is classic, he should have, would have, could have held them all the way down to here. We could have made so much more money. The markets are using you. This markets are very, very dangerous, and they will use you and drive you emotionally nuts. You'll blow out several accounts without a proven system or working with a proven trader like me. Instead of carving out a paycheck, the markets will start hypnotizing you and start stealing your money from you. Two or three accounts blown out is usually enough, but I've had so many things happen over the last 18 years in the industry working with traders, getting these horrifying calls of some guy who got caught in the markets using him and blew out Johnny's college fund and hasn't told his wife yet, and he's asking me what to do. But again, because he's brainwashed, he's thinking, no, come on, Mohan, give me a technique where I can earn it all back. And I'm going, boy, you don't get it, do you? The markets are using you. They've got you in a straitjacket. You're ready for the mental ward, and you're emailing me instead of saying, what should I do? My advice to him was immediately, you've got to confess to your wife and save your marriage that you blew out the college fund for your only child there, and hope she'll stay with you. If she's a good woman, she'll stick with you, and you got to prove to her though that you're not, going to just do this anymore. And they get mad at me because they want me to give them a magic formula to get all their $50,000, $30,000 back. You see? So you got to understand this if you're new to the room. I'm telling you, it's going to save you a lot of anxiety. I don't care. Yeah, they're 42. We got out at 40. I don't care. I could care less. Let them get. This thing's so overdue for a blowout $150 down day in the Dow. They could go down to 60 handle again or lower. I don't care. Not trading that way. That's not our method. We want to go in with as much, let's say, as low a risk as possible and try to carve out a paycheck every day. That can be done. Listen to me carefully. This is the most important thing about being in our room. If you want to keep chasing someone who claims they're going to catch the big move, you go for it, but it's not. You're not going to find it. Let me be straight with you. You're not going to find it. It's an illusion. Sometimes we'll catch those bigger moves when the right setup occurs. This one potentially was set up for a bigger move, but frankly, I was very happy to get 5 points out of it. This was a 5 point move in my view. That's how I had it pegged. That's what we got. You'll find that out if you don't have to. I hope you don't have to find out the hard way by blowing out two or three $10,000 accounts. I may let you back in the room if you come crawling back and do that, but let me tell you something. This is a privileged room for those who want to be mature traders, mature adults. You know what I mean? And the hardest thing for a beginning trader to get over is when the markets start using them and their brain starts getting infected with this would have, should have, could have crap. Oh, we could have, would have held it for so much longer and gotten a bigger move. Really? Did you hold it? Why didn't you hold short? Well, I was following you, Mohan. Yeah, but you're saying you woulda, coulda, should have held it. Why didn't you hold it longer? See, that's the excuse. They pin it on me. But I'm telling you right now, the professional traders I've known and everything, they go in and do exactly what we're doing in the room. Yes, some of them will catch the big. We all have that hope of having the right setup and the right analysis at that time where we're actually looking for that. But do you think in this environment it's right to look for the larger scale move on the downside? Not really, because look at how strongly they're rigging this market. So the right thing to do is to look for uh, nice precision scalps. And here's the secret, and this is where like the beginners and the smaller traders, they can't handle this. The key is to build up to a blue collar working trader account or more. That's how you make the money. That's how the floor traders, everybody I know, 10 contracts on the S&P, pit traded S&P, which was $500 a point back then, 10 contracts, and they're scalping for 2 to 3 to 4 ticks. They make uh, whatever that is, $800, and they're at lunch. And they'll sit there in the pit all day waiting for that really, what they perceive as a really, really, really strongest potential for that they can. They would go in the pit, they'd buy 10 from the guy on the left, and they would be, shaking and hoping that that market's going to run up 3 ticks, and they hand them to the guy next to them. And they're at lunch having a couple beers on a Friday or whatever day, and they're really happy. They call their wife, say, "Hey, I'm done for the day, be home early. Let's go out to dinner. Made $800 today." All I can do is try to help you get that understanding, and you'll see the value of our room and how this is how to go for the longevity in trading. Anyway, so thanks again. Good job holding that trade. So again, we were short from 63 quarter. We covered them up at 48 quarter for a 5 point gain. And again, on a blue collar working traders account, which is 4 contracts in a conservative $5,000 to $8,000 small account. 4 times 20 is $80 a point times 5. You can see it's a $400 move.